Hello guys, in this video I'm going to be talking about imbalances. What imbalance is when one side of the market is more aggressive or stronger than the other side of the market. To see the imbalances you need to have the bid and ask setting for the order flow, so not the volume setting but the bid and ask. You need to see the bid and the ask of every footprint. All right, so let's first have a look in here. This is a selling footprint, and in a selling footprint like that, or in a downtrend, the sellers are way more aggressive than the buyers. They place a lot of market sell orders, and this way they are able to push the price downwards. There is a selling pressure, all right? They do that with selling market orders. Now, selling imbalances show on bid. They show in here. This is bid, and this is where the selling imbalances show. Now the software marks them in blue. So this is selling imbalance in here, in here. Also in here there is selling imbalance, in here, and also in here. Those are selling imbalances. Now, those blue numbers mark that sellers were way more aggressive at those price levels than the buyers. If there are a lot of those selling imbalances, that means that the sellers are really aggressive, and usually they are pushing the price aggressively downwards. Now, let's have a look at here. Now, this is a buying footprint. This is a green candle, price is moving upwards. And when there is an uptrend or when the price is moving upwards, the buyers are more aggressive than the sellers. The buyers are entering the market with buy market orders, and this is what drives the price upwards. The aggressivity of the buyers who are entering with buying market orders. Now, buying imbalance is also marked in blue color. You can see it in here, and it is marked on the ask side of the footprint on the right side in here. All right. So whenever you see those blue numbers on the ask side of the footprint, then you know that at those places there are aggressive buyers. Those buyers are way more aggressive than the sellers, and usually this is a sign that buyers are trying to push the price upwards, or they are trying to get into their positions because they expect the market will go upwards. Now, what those blue numbers actually tell us is that one side of the market is 3 times or more aggressive than the other side of the market. Now, if you remember, I already talked about that. When you read the footprint, you always compare those two numbers like diagonally, all right? So you compare 20 to 25, 49 to 36, 70 to 43, and so on. And a selling imbalance appears when this number is 300% or more times bigger than this. In other words, 3 times or more bigger than this. So 7 is 3 times or more bigger than 1, all right? 10 is 10 or more times bigger than 0. Now 14 is 3 or more times bigger than 4. 29 is 3 times or more bigger than 7. 99 compared to 3, and you also compare 122 to 39. You always compare those numbers, and if the number on bid is 3 or more times bigger than the number on the offer, then it gets highlighted in blue, and it says that there's imbalance. There's imbalance between buyers and sellers. The sellers are 3 times or more aggressive than the buyers at this place. All right. Now, if you go to options, then you can actually change the percentage, but the default is 300. That's what I use, and this is what suits me, but you can change this number however you want. And another important thing I should probably mention here is if you want to actually display those imbalances and those imbalance clusters, you need to tick this, all right? Other way, it won't show. Now let's have a look at this buying footprint. In here, you also compare always diagonally like that. So in this case, 51 is 3 times or more bigger than 1. 115 is 3 times or more bigger than 27, and so on. You always compare diagonally. Those 4 numbers are imbalances. Buyers are way more aggressive than the sellers at those places, right? Now, this is how you can use this in your trading. The imbalances tell you this. One side of the market is more aggressive than the other side. You can use it when you are reading the order flow chart, when you are trying to understand what's going on the market, whether the buyers or the sellers are more aggressive. So the imbalances are ideal for that. Then imbalances can confirm a trend. For example, in here, the price is moving upwards and you see imbalances appear in the footprint. Then it sort of confirms the strength and aggressivity of the buyers who are pushing the price upwards. So imbalances confirm a trend. When there are a lot of imbalances, the trend is very aggressive. The buyers are in control and the trend is strong and likely to continue. Imbalances can also help as a warning if you want to enter a trade which goes against those imbalances. So imagine you have a short level somewhere in here. Let's say this is your short level, this is a resistance, and you want to go short from there, but you see that there are a lot of buying imbalances going against your short. Imagine there are a lot of buying imbalances, for example, also in here. Then you see that the buyers are pretty aggressive, they are pushing price upwards, and especially that the buyers are way more aggressive than the sellers. So unless you see any confirmation at this level or around your resistance level, you don't really want to enter a short from there because you see that the buyers are really aggressive. So that's the warning, right? And the fourth way how you can use imbalances is that stacked imbalances show you strong support and the resistance zones, especially when those stacked imbalances formed in a trend or in a rejection. Now, what this stacked imbalance actually is, let's have a look at it. Stacked imbalance is when there is a 3 or more imbalances stacked like this. 1, 2, 3. You can change this number. The default number is 3, but you can change it, all right? And what it will do is that it will print this box when there is 3 or more of them stacked together. The order flow software will print this box and it will tell you that this is a strong support or resistance zone. In this case, this is a strong resistance because there are a lot of aggressive sellers in here. So when the price makes it back to this level again, it's likely that those aggressive sellers will become aggressive again and they'll start pushing the price downwards from this resistance. And this is actually a standalone strategy which you can use with the order flow. Now, there's one more setting for this box. It's a pretty important setting. imbalance cluster box draw mode. When it says until tested, then it means that this whole box will show until the price hits it and tests it. You can alter that, so this box will, for example, show only for a certain period of time, but I like to use it this way. I like to have those printed like this until those levels got tested. And this is how the strategy should work, alright? As you can see, there are stacked imbalances in here. 3 imbalances. This is the resistance. Price reacts to this resistance. Those sellers start to pushing the price downwards. And this is the reaction. Let me show you some more examples of this simple strategy. There's a downtrend. I like to use the stacked imbalances when there's a downtrend. As you can see, the sellers are pushing the price pretty aggressively. There are a lot of those imbalances in here. And in those 2 places, there were selling imbalances stacked. So this is a resistance. This is a reaction to the resistance. This is another resistance. And this is the reaction to it. That's the aggressive sellers defending their selling positions. Now in here there is a buying imbalance, strong buyers pushing price upwards, creating this stacked imbalance right there, 3 imbalances. So the software creates this highlighted area and it marks a support. This is the reaction to it. Also, aggressive sellers appear in here at the start of this aggressive movement. So this is a resistance zone. The price hits it, and this is the reaction to it. This is how you can trade the stacked imbalances. Now, here is how you can actually trade it. You can trade it as a standalone strategy. This is what I showed you. You just wait for this to appear and then you automatically enter a trade. This is not a holy grail strategy. It won't work all the time. Sometimes it will work as a charm. Sometimes it won't really give you any good levels. So be careful. I wouldn't really prefer to trade just based on this, but still it is a very good thing to have in your charts, to watch in your charts and to add to your strategies. So what I actually like more is to use this as a confirmation strategy. You can use this as a confirmation strategy with volume profile, with VWAP, with price action, or with other order flow strategies like the volume cluster strategy or multiple nodes strategy, or with a strategy with trade filters. You can combine all those and look for strategy confluences when more trading strategies point to a strong support and resistance level. Alright, so for example, when you are trading with volume profile, there is a significant volume area. You're not sure where exactly to place your level, or you're not really sure if this level is strong or if you want to trade it or no. You can use the order flow, look at the area, and if there is stacked imbalance there, you have that level confirmed. That's how you can use it. You can use it on any time frame you want. I like to use it on a 5-minute time frame and on a 30-minute time frame. And you can also use this strategy on any trading instrument, but important thing, you need to adjust it. You'll probably need to adjust it. So for example, you will need to adjust the percentage from 300, for example, to 200 or to 400, depending on the instrument and depending on what you prefer, how many signals you prefer. And also you may want to change the number of those stacked imbalances. Maybe if there's a very volatile trading instrument, you'll want to have, for example, 5 of them at top of each other to start printing this highlighted area. But for the Euro futures, which I prefer to trade with the order flow, I use 300% and I use 3 stacked imbalances as a default. Now let's move forward. I'm going to show you the standalone strategy, how you can trade this as a standalone strategy. So in here, the software pointed out this imbalance, those 3. So this is a strong resistance area. By the way, this is a 5-minute chart of the Euro futures. This is the reaction to the resistance. Another example, this is a 5-minute chart. This would be sort of scalp trade actually. Those are stacked imbalances, stacked selling imbalances, which means aggressive sellers in here. And as you can see, those sellers are defending this resistance zone. And this is the reaction to it. There's also a second one, but this zone is already tested, so I wouldn't really trade it in here, only this first test. All right, you always want to see the price to move at least a little bit below that imbalance, like in here, and then make a pullback. All right, you always want to see whole candles below the resistance because you always want to have the pullback. Now, another example, there are actually 4 imbalances in here, 1, 2, 3, 4. Aggressive sellers in here, and this is the first test. Now the software will print this area, this highlighted area, until the whole area gets tested. That's why it didn't stop in here when it got tested. All right, that's how it was made. The whole area needs to be tested before this highlighted zone disappears. All right, another example. This is also 5-minute chart. There's imbalance in here, and also there was some buying imbalance somewhere on the left. So this is the buying reaction to that. There is not really any significant reaction to this zone, to those imbalances, but there is a nice reaction to those imbalances right there. Now in case like that, when you are not sure which one to pick, you may want to look at another trading strategy, preferably for some heavy volume nodes or trade filters or volume clusters within this zone. And this could actually help you to decide where to place your short. So for example, if there was a heavy volume cluster in here or significant volume node in here, then you would go short from there. You always want to trade from the heaviest volumes. Now another example. In here there is a stacked buying imbalance right there, but it haven't been tested yet. But there is a second one in here, also strong stacked imbalance. This is the pullback to this area, and this is the reaction to it. In here, this is a very nice example. There's a downtrend. I really like using those imbalances in a trend. In here you can see that there are 4 stacked imbalances creating this resistance zone, and this is a nice reaction after a pullback. What's also worth pointing out in here is that all those candles have negative delta, which means more aggressive sellers than the buyers, which tells you that the downtrend is most likely going to continue. All right, so let's go into next example. This is a 30-minute chart of the Euro futures. There is a stacked buying imbalance in here. And I really like this one because this is a rejection of lower prices. So this imbalance, this stacked imbalance actually showed within the rejection. So this is the support, price makes a pullback, and here we go. This is the reaction. Another one in here, very nice example of the stacked imbalances in a downtrend. So sellers are pushing the price downwards, and at this place you can really see the aggressivity of the sellers. 4 stacked imbalances right there. This is the pullback to this resistance area, and this is the reaction to it. By the way, if you look in here, a lot of buying imbalances. So this trade would actually look pretty risky before the reaction because of those aggressive buyers showing up. Alright, but apparently those sellers were way more stronger, way more aggressive, so those buyers didn't really get a chance, and the price just went into another sell-off from there. Now, another nice example of the stacked imbalances. Also in a trend, strong buying activity in here. You can see that there were a lot of buying imbalances in this whole area, but the only place where they were stacked was in here. So this marks a strong support. The price made a pullback into this area and reacted to it very nicely. Now the last example is actually a screenshot from today. As I was preparing this slideshow, this very nice reaction to a stacked imbalance occurred on the euro. There was a strong downtrend, and within that downtrend, stacked imbalance in here. Aggressive sellers adding to their selling positions and pushing the price even lower. This was like 2 or 3 days ago. That's why I used 2 charts, so it's not too zoomed out. And this is the reaction to it today. This is the reaction which occurred like an hour ago. Alright, so that's the stacked imbalances. That's the standalone strategy. You can trade with the stacked imbalances. Now I showed you a lot of nice examples, but please keep in mind that there are also trades which will fail. There are also very nicely looking stacked imbalances and the market won't react to them. So this strategy is not a holy grail, because there is no trading strategy which would be a holy grail, alright? Keep that in mind. The best way how to trade this, I think, is in a confluence with some other indicator or with some other trading strategy. Alright, so that's it for this video. Thanks for watching, and I'll see you in the next one.